Hello, I'm Grant Wallstrom, contributing editor to Internal Auditor magazine's fraud department and senior manager of fraud forensics investigations at ADT in Boca Raton, Florida. I'm pleased to introduce this episode of Fraud on the All Things Internal Audit podcast, which provides fictionalized accounts of fraud based on actual events. IIA members can read the full fraud article exclusively in the December 2023 issue of Internal Auditor magazine, including bonus material and lessons learned. Listen now to Small Signs of Big Problems.
Part 1. A Slant in the Wrong Direction. Thomas Moreland thought his eyes were playing tricks on him. But the more he looked at the two signatures, the more different they looked from each other. One had quick, bold strokes, whereas the other had a soft flow and ease with the name slanting in the other direction. But in both signatures, the name was the same. Moreland, an internal auditor for Pogo, a big technology company, had noticed the discrepancy in signatures when he was reviewing transactions for the company's Minesweep subsidiary. Pogo had owned Minesweep for 5 years and used the computer hardware company to create supply chain efficiencies. Moreland knew the company well enough that he was expecting to quickly check the books before moving on to another subsidiary. However, during his review, Moreland noticed how much Minesweep had spent on shipping. Although nothing was outwardly unusual, he wanted to take a closer look at the places and numbers he normally audited, starting with Minesweep's packaging and shipping function. Moreland learned that Minesweep outsourced packaging and shipping to another company, PackRight, which was based in a country with a high-risk profile. While other tech companies had operations in that country, Moreland knew it also was a common base for shell companies and other legally questionable business activities. With that in mind, he set out to look for anything suspicious. At first blush, the PackRight relationship appeared legitimate. The paperwork checked out, the numbers reconciled, and the documents were accurate. That changed when Moreland began seeing documents with different signatures for Evan Sims, Minesweep's Chief Logistics Management Officer. The documents included contracts, vendor approvals, and expense reports, and the signatures varied depending on the type of document Sims was signing. Moreland suspected someone was forging Sims' signature. He needed to get to the bottom of it as soon as possible. Part 2. Forging Ahead. If Moreland was lucky, Sims would know who the forger was. Rather than call Sims, he decided to document his actions with an email first, asking Sims to meet with him over the phone to discuss some questions that had arisen during the audit. During their conversation, Sims attributed the discrepancy in the signatures to the shipping documentation from PackRight. Sims explained that he traveled several times a month and did not want to delay any business while he was away. During Sims' trips, his administrative assistant used a stamped signature to quickly approve shipping documents because delays could significantly impact business and cost the company money. Sims said he personally signed off on the packaging department paperwork, which was not as urgent and could wait until his return. Moreland was uncomfortable with Sims' explanation. He understood the need to conduct business efficiently, but it didn't make sense to delegate that authority to an administrative assistant. Sims' direct report, the vice president of logistics, would know more about the activities involved and could sign the documents while Sims was traveling. Why not delegate this activity to your direct report instead of your admin? Moreland asked. I don't trust him to do that, Sims replied. In fact, he tried to get involved before, and I had to meet with human resources to make sure that was not something he was authorized to do. Moreland was shocked by Sims's answer, and the call left Moreland with more questions. Indeed, the conversation only complicated what Moreland thought he had found. Instead of a simple but poorly executed forgery scheme, something much more worrisome could be happening. He decided to look closer at the packaging activities and the outsourced shipping function. Part 3. Unpacking the scheme. Moreland studied the documents with the questionable signature and noticed most of them were only on documents with Packwright and not the other shipping vendors they used. Trusting his gut, he began looking into Packwright's ownership and how it did business. Moreland was stunned by what he found. One of Packwright's owners was none other than Sims. It appeared Packwright was created shortly after Pogo's decision to make its supply chain more efficient. By authorizing the use of Packwright for shipping services and financially benefiting from the business, Sims was playing both sides. He made sure no one would catch on by having his assistant approve these transactions instead of his direct report. Contracting with Packwright enabled Sims to funnel millions of dollars to his offshore company through inflated pricing mechanisms, which were often 15% above the normal market price. Sims' scheme was a clear violation of strict policies Pogo and Minesweep had in place to prevent conflicts of interest and undisclosed related party activities. When Moreland approached him about his findings, Sims claimed nothing was wrong with the business arrangement because Packwright performed the services for which it was contracted. Minesweep elected to fire Sims, but not to press charges.
This has been Fraud, a fictionalized account based on actual events, brought to you by the Institute of Internal Auditors. IIA members can access the full story in the December 2023 issue of Internal Auditor magazine, including bonus material on lessons learned. To read more, visit internalauditor.theiia.org. For more fraud-related resources, including guidance and thought leadership from the IIA and the ACFE, visit theiia.org/ACFE fraud.